This is the point where a lot of traders feel pressured to act. And the what ifs start, you doubt yourself, you're torn between doing nothing and possibly missing out on a good trade, or entering and worrying if you've forced the trade. That happens to every trader. The difference isn't emotion, it's how you respond to it. And in this video, I'm going to show you how to handle that moment properly. So we have here, the market is hovering around a major psychological level, the 1.19000. Okay, if we look back a little bit, the most recent time it hit that level, you can see hit reversal. Okay, we can go back even further, scroll back here and see when it hit all the way back in 2021, hit reversal. Earlier in 2021, hit reversal. Okay, so we have a psychological level which we can see evidence of the market hitting previously and reversing. Okay, so there's good reason to believe we may have a reversal here too now. What happens here is the emotions kick in. Am I doing the right thing, etc., etc. What we want to do is not eliminate the emotion, because you'll never completely eliminate it. What you want to do is anchor your trading in a rules-based system where you're not judging at the time and using your emotion. Well, I hope I win, but I hope if I enter, etc., etc. What you want to do is anchor it in a rules-based system where when these certain things happen, we say, yes, we enter the trade. If they don't happen, and they don't happen precisely like that, we don't take the trade. Right? So there's no subjective, emotional, erratic thinking at the time. We watch slowly for the setup and we anchor in the rules. So we don't want to be just entering here and hoping for the best. Instead, we can anchor this in some extra confirmation. So we can see, if we go down to the 1 hour, we can see what happened was, if I just move this chart along a bit, right? Okay, so we have our clear movement here. Big, strong, bullish move, which came to an end. Then we had hits this area, reverses, okay? And then we have it approach this area again, and at which point we have a second recent test of this level. So a good indication it's not likely to continue on and we're likely to see a reversal, okay? Not certain, never is in trading, it's a balance of probabilities. So we have here what, of course, most traders will realize is called a double top. Hit, reversal, hit again. We anchor in precise rules. So my precise rules for the double top are that we've had a strong bullish move, one test, a reversal, we approach again, and the candle which confirms the double top must at least hit the highest close, but not close above the highest high. Well, we can see there, this candle hit the highest close, and it closed here below the highest high of the first test. So this candle, right, this candle here confirms our double top, and at that point we enter. We've had a bullish move, psychological level, previous evidence of it being a point of reversal, and we've had a double top on the lower time frame, the 1 hour. So at that point we should be entering the trade. There should be no, well, I hope, well, what if? None of that. We watch the setup in advance, so we see it coming several hours beforehand, so we've got plenty of time. It doesn't catch us by surprise. We don't panic. We can slowly see its progression. We can follow the rules of leg 1, down, leg 2, confirms the double top, we enter. Okay, and we enter, in my case with my rules, I would do an ATR stop loss. Okay, so let's calculate that ATR stop loss. The high is 1.18976. And the ATR 0.00262, 1.19238. And my target would be the first point where we hit some structure, which is there, because that's the first danger zone for a possible reversal. And I'll put it at the close of the highest point of the structure there. So that would give us potentially a 4.82 risk reward. Very good risk reward in our favor. Okay, we've anchored this in rules. There's no emotion at the time. We check the charts regularly so that the setup doesn't just spring itself on us and we're like, oh, panic, I don't want to miss it. None of that. We have rules for what constitutes a double top. We have rules for which candle we would enter on, the one that confirms the double top. And we enter short at the close of that candle, which would have been 1500 hours yesterday, UK time. We're in now. There's nothing more to do. It either hits the target, hits the stop. If you find that hard though, some traders do, sometimes set it and forget it and just wait until it either hits the target or the stop is the best thing. But try and remove the emotions from the decision making. The emotion should not be influencing the decisions. The rules should be completely in control of the decisions.